Trevor Points, how you doing? Full name, Polynesian Pip, how you guys doing? Audio okay for you folks? Just want to make sure the mic is coming in, not too loud, not too soft, so appreciate your feedback. Trevor Points, thanks. AOEUL. Okay, I'm not even going to try to pronounce that, but thanks for the feedback. Cody G, how you doing? Trevor Points again, thank you. Polynesian Pit, thanks, brother. Aloha out there. Pete Durbin, Mike. Okay, great. Full name, Min Chin Xiao. Yo. Okay, great. Thanks. Good to know it's coming in okay. I tell you, man, just a lot of crazy things just keep going on in the world. Hard to keep up, but then again, do you want to keep up with what's crazy, right? So, you got to keep your sanity somewhere. Mel Noda, how you doing? Gilpit, how you doing? Kevin Fernandez. Toronto, how you doing, my friend? Joe Bradford, Jeff 702. A lot is happening. Trying to keep up with it all. Like I said, you put together a program, and next thing you know, it starts to get a bit dated. But nonetheless, we'll go ahead and get started. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly live stream, so I'm glad that each of you could be here. Happy Easter. Hope you had a good Easter Sunday. A lot of, again, how do you keep up with everything that's going on, right? But we'll try our best. So glad you folks could be here. Joe Bradford, again, how you doing? Marilyn Falk, how you doing? Hello from Perth. Paul Eldon, how you doing? Good that you guys could be here. Near-term extinction. How you doing, my friend? A lot of different opinions. Opinions are, for the most part, good. For the most part, opinions are good. But again, glad you all could be here. Good evening if you're back in the States. If you're in Europe, I know it's early in the morning. If you're in Asia, happy Monday morning. Welcome back to work if you are at work, or maybe you're as in Singapore, we have the circuit breaker going. And we're pretty much required to stay at home if we can, stay at home and work if we can. And but a little bit of good news, I think recently we've gotten the okay. Silver bullion. We were waiting for the to see our status from the government, and I think the government did deem us as being essential. So we're going to make some changes, and we're going to move according to what the government guidelines are for being essential. The vault was always essential from the start, but we had a little bit of a question as to the retail shop. So we're going to make adjustments with that. I guess the best way is just to go to our website to keep posted on that, especially if you are in Singapore. But again, as always, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified of new updates, and give us a thumbs up if you like what we do. Even if you don't, we still like those thumbs up, and we appreciate it. You can always find us on social media. www.silverbullion.com.sg is our website. Silverbullion SG over on Facebook. Twitter, Silverbullion PL for Private Limited. The audio versions can be found at bit.ly, bit.ly, SBTV iTunes, or SBTV Spotify. And again, join us on our Telegram Crisis Tracker group, where we do post what we find as far as gold and silver, economy, financial things and whatnot. So we do hope that you'll join us there. And coming up on SBTV in our interviews, we have David Morgan, and we also have Rick Rule. So those should be two pretty interesting interviews. As you guys know, a lot of you know David Morgan, widely recognized analyst in the precious metals industry, consults for hedge funds, mining companies, depositories, and individual investors. And he's the publisher of the Morgan Report and the author of the book, The Silver Manifesto. As a public service, David provides a free weekly e-letter available at the Morgan Report, and that's good stuff. And then we're going to have Rick Rule. Began his career in securities back in '74 and has been principally involved in natural resource security investments ever since. He's a leading resource investor specializing in mining, energy, water utilities, forest products, and agriculture. Mr. Rule is also the founder of Global Resource Investments, president and CEO of Sprott U.S. Holdings, and a member of the Sprott Inc. Board of Directors. So we do hope that you'll join us for those two interviews coming up. Be sure to subscribe. Click on the bell so you don't miss these interviews. And if you have someone you'd like to see, as always, let us know and we'll try and get them on. So it's always good to have your feedback when it comes to that, as far as opinions on who you want to see. Okay, so let's see. Always be funding. Hey there, it's the end of the world as we know. I think you know what? There was this one scene in that movie Rollover where one of the guys said it's the end of the world, and the response he got back was, it's the end of the world as you know it. So is it for all of us, or maybe for some of us, most of us? But I think, a good portion of us here, we've not that we've been preparing for the end of the world, but we kind of knew that the Powells, I always call it the Powells that be, they were very irresponsible. And, we had to make our own decisions on what to do to make it through their period or terms of irresponsibleness, if that's even a word. But I think, a lot of you guys here, you've seen it coming. And none of us wish anything bad. It's just that we knew that the Powells that be, they were doing a lot of wrong things. And we had to improvise accordingly. Truth Teller, happy Easter. Absolutely. Bobby Jones, happy Easter. Happy Easter. Happy Easter. Happy important day. Happy Easter. Jeff 702, let the free market set the real price. Ding, ding, ding. My friend, Jeff 702, you hit it on the head. We're going to be taking a look at that because I think most of us already know, we're starting to hear chirping that it's just a matter of time before the Fed actually goes into the equities markets. Same like Japan, right? Some guys think they've already been doing that, but nonetheless, we're hearing that a lot of us are hearing that the Fed may want to go into the markets. And will you ever really know the true price of anything once that happens, right? So we'll get into that a bit later. That's going to be the program portion that we will take a look at. Gotta take a look at that Twitter feed though. Twitter is always interesting to see what people are saying and what's going on. And what I do is I typically will go through it and bookmark some things. And this guy, Dio Kashkari, tell you what, man, he's a character. Bullard, Brad Houston, Bullard calling for universal testing and identity proof cards. Can you believe that? Dr. Neil Kashkari now predicting 18 months of blackouts. Not content with ruining the economy and printing. The Federal Reserve wants to expand its God complex and transcend its mandate. So America should be ready for 18 months of shutdowns in long, hard. Maybe we'll take a peek at this. We'll take a quick look, see what it's about. 18 months, right? I think originally we were looking at before the summer. So this is from Market Watch. America should be ready for 18 months of shutdowns in long, hard road ahead, warns Fed's Neil Kashkari. This could be a long, hard road that we have ahead of us until we get to either an effective therapy or a vaccine. They're really pushing this narrative right now. It's hard for me to see a V-shaped recovery under that scenario. So just read a couple paragraphs here. Neil Kashkari, head of the Federal Reserve Bank of Minneapolis, painting a rather gloomy picture in a CBS interview that he had, where he's saying what lies ahead for the U.S. economy is, or as the country continues to battle the virus outbreak. Kashkari, acknowledging the downside, of what a prolonged shutdown could mean for the economies of the U.S., barring some healthcare miracle, is looking at an 18-month strategy of rolling shutdowns based on what has happened in other countries. Okay, rolling shutdowns. Okay, well, we'll see what that's all about. Neil Kashkari, our favorite Fed head, right? Sure. Looking at some of your comments here. Excuse me. Happy Easter again. Yes, yes. Happy Easter. Um, let's see. Quick addict Bullard. Okay. Yeah. Well, you got your opinion there, and I'm not going to say if I argue or if I agree with that one. Let's see. Greetings from Jamaica, overnight entertainment. How are you doing? But anyway, yeah, what Neil Kashkari says, he's been saying a lot of things, and to be frank, I don't know if he's just trying to troll people or what his deal is. Intelligent man, yes, absolutely, but his messages that he throws out, you got to wonder what's his motive behind it, because it's definitely not in line typically with the rest of the Fed, or at least the way the messages are being delivered. So you got to kind of wonder, what's going on with this guy. But nonetheless, let's go back and take a look at that Twitter feed. What else is going on? Okay, so we had Neil Kashkari, and then we had let's see, scrolling down a bit. Excuse me. This was a bit of a tough one. Daniel DiMartino Booth, who we've had a couple times. 10,000 in one day. If you're able to donate, please consider the great works being done by your local food banks. This is in my hometown of San Antonio. These images will stay with us of so many Americans with no rainy day funds. We often hear how people live paycheck to paycheck, and I think probably the majority of us have been there, so we understand. Um, so this from the San Antonio Express News, local paper in Texas. Vehicles started lining up before dawn as locals hit hard by economic effects of the virus seek aid from the San Antonio Food Bank. So it's really happening, guys. April 9th, so pretty recent. And perhaps the most sobering reminder yet of the economic fallout caused by the pandemic, San Antonio Food Bank aided about 10,000 households last week, Thursday, in a record setting giveaway at the South Side Flea Market. It was a rough one day, said Food Bank President CEO Eric Cooper, after the largest single day distribution in the nonprofit's 40-year history. We have never executed on as large of a demand as we are now. So I guess apparently they had a drive-through where you could come in and get some relief. And I'm not going to call it help. I'm going to call it relief, because none of this was our doing, and a lot of people do need relief. So over that desperation-filled 10-day span, the agency has fed about 15,500 households, with each distribution drawing more than the first. Cooper said the food bank is planning 2 more giveaways for the next week, possibly on Thursday and Friday, but he's not sure if he can get them done without the help from the National Guard or somebody. National Guard or somebody. That's where we're at. This is the area where we're at right now, where we're heading. So I mean, really, guys, this is what saddling up and silver up is all about. We got to be ready. We got to be ready to move, ready to for whatever's going to be thrown our way, because a lot of things are going to be coming our way. Polynesian PIP shutdown or lockdown. I'm not sure the content of there, but it's both, really. I think, huh? People are getting shut down. People are getting locked down. Tony, how you doing? Paul Eldon, they want to put us on digital currency to have full control of our finances. Paul Eldon, I'm in complete agreement with you there. I think we've done a few live streams on central bank digital currencies. We've already seen how one of the things that was stuck into that stimulus package, that bill, was a Fed digital currency and digital wallets. So we already are seeing, if you're awake to it, you're already seeing it. If this is news for you, there's a lot to catch up on. Even if you do stay pretty alert with the news, stay in touch with the news, you can't keep up with it. But digital wallets were already, or they are in the making. So yes, Central banks, it's no secret, they want to go digital with their central bank digital currencies. So absolutely agree with that. Travis R, how you doing? George Kaiser, how you doing? Um, George Kaiser, we're trying to get your brother Max Kaiser on. So if you can talk to your brother for us, that'd be really good too. Just kidding, George. Let's see. Always be funding donated to a local food bank today. So sad. Um, yeah, it's a lot of people need some relief right now, and I think you're going to see more and more of this starting to come out a bit. And again, always silver up, saddle up, silver up. Yeah, I mean, these are two things that you gotta really, really have to, have to do. So let me go down that Twitter bookmark page again. Catherine Austin Fitz, fire Fauci, investigate and prosecute Fauci and Gates. I know this is going to be a hot topic coming up, and I'm sure a lot of you out there already have some pretty strong opinions on this whole Gates things, where he's trying to push for everyone to be vaccinated, and they're even trying to push cards that we have to carry. And it's I tell you what, this is a very, very new world that we are going to be stumbling into. None of us really, I don't think many of us saw this coming, and we're really kind of stumbling in the door with what's going on. Jim Core, he wants everyone vaccinated and with a digital certificate implant to prove vaccination. But here is Robert F. Kennedy Jr.'s damning summary of the horrors inflicted on the world by Bill Gates funded vaccine programs. You guys can read that one on your own. I think everyone's going to have a different opinion on this, and I don't want to get too heavily into that one because you know if people want to get vaccine, that's their choice. Some people see the vaccine as just another way to be controlled. That's their choice to believe that as well, and really that's personal opinions for each of you guys to debate. Um, Comics, well, despite what comics say, gold shortages will not be solved by airplanes alone. And we kind of talked about this, where the problem that was coming out was that for deliveries anyway, the gold could not move fast enough because airports are basically shut down. So it goes on to say mine shutdowns due to the virus are higher in gold than other metals. And this is from Marin Katusa. It's not guaranteed every one of the mines will come back online. Excuse me. And that's a good point also, because if these mines shut down, uh, you're really going to see either some sort of nationalization, some sort of takeover, or some sort of even more of a shortage. So this is pretty interesting, and something that we're going to have to watch. Daniel DiMartino Booth, critics of 50 billion airline bailout, says U.S. carriers should not receive cash grants from federal governments and should instead restructure in bankruptcy or borrow billions more in order to have the liquidity needed to withstand rapid drop in prices. And this goes back to what we talked about earlier, where companies are getting bailed out. Fed is looking at going into the stock market. What is what is the true price of anything anymore? Price discovery. None of us are even going to know anymore, and we're going to put money in the market, and we're going to cheer, and we're going to say, "Hey, my investment's going up." But you got to ask yourself fundamentally, why is or are the investments going up in the stock market? Are the companies doing better, or are the companies getting help? Companies are the ones needing the help. People need relief. So I mean, the markets are just it, it's all smoke and mirrors right now, my opinion anyway, and I think a lot of your opinions as well. Smoke and mirrors. Let's go down a bit more. Um, let's see. It's going to be worse than the Great Recession. J.P. Morgan to raise mortgage borrowing standards as economic outlook darkens. In other words, J.P. Morgan doesn't want to give you the money; they'd rather hang on to it themselves. Um, Catherine Austin Fitz again. This is also interesting. The Earth's largest telescopes to close. So, more than 100 of the Earth's largest telescopes are now closed, and astronomers are worried about the pandemic's long term impacts on astronomy. Now, that's interesting. Is there, I know a lot of you guys are thinking, hey, is there something out there that they don't want us to see coming? Okay, who knows? Who knows, right? So that's a whole nother topic for a whole nother day. So that one's pretty interesting. And Kiyosaki, does it seem fishy? Repo markets crash in September 2019. Corona appears in 2020. Economy closed, markets crash, depression imminent, trillions in helicopter money for rich and poor. Gates leaves Microsoft and has a vaccine in human testing. Coincidence? So I guess even Kiyosaki is pretty um suspect about what's going on with Gates and vaccines. Anyway, here's a poll. What do you guys say? Yes, just coincidence, or no, something's going on? So I'll give you folks a little bit of time. Let me know what you want me to click on, and then we'll see the results here. So again, is all of this just a coincidence, or no? Is something going on? So we'll wait and see what your opinions are. Then we'll go ahead and click and see what the poll is. So let's see. No, no. Okay, no, no. Something going on. Okay, let's just go ahead and click it already. Too much suspense here. Okay, so no, something's going on. Yeah, 3/4 of us, 75%, feel that something's going on, and I'm one of them. I totally agree with that. Kiyosaki, yes, he's the man. We're trying to get him on as well. He's actually a pretty big guy. I met him once, and I didn't realize how big he was, how tall he was. Luke Groman, next up. Round up the homeless, the elderly, and the at risk and put them in camps for their protection. We need to be very careful here. And he's responding to a tweet from CNN. Dr. Anthony Fauci says the idea of Americans carrying certificates of immunity to prove they have tested positive for coronavirus antibodies might have some merit. Um, it's a setup. This whole thing is being set up, and Chapter 11, there is a purpose, but it's not being allowed to function. And I'm just going to call this gentleman Chamath P. He's going to be part of the program part where I'm actually going to play this clip with what he said. So we're going to be getting into that, and a few things though. Excuse me. I think you folks came across some news. Bank of England, they're basically financing the government right now, and it's I don't know where you go from there, And we have, I think, over 30% of people have not paid their rent for last month. There's articles on that as well, and then we had this article also from Fox Business, I believe it was. Could be wrong here. Okay. Large scale debt cancellation during the pandemic is unthinkable. ECB's Lagarde says, such a caring woman, right? I mean, we've seen her with the IMF, and she's consistent. Lagarde said the world needs to focus on keeping the economy going, not the cancellation question. Okay, so European Central Bank President Christine Lagarde dismissed last week the possibility of a generalized cancellation of debts contracted during the pandemic. That seems totally unthinkable to me, she says. It's not the right time to ask the cancellation questions. Right now, we are concentrated on keeping the economy going. How about people's health, Ms. Lagarde? Does that matter to you? So later on, we will look at how to pay down the debt and how we manage public finances in the most efficient way. Yeah, so that's she's just looking at hey, let's not talk about canceling your debts right now. Let's just keep the economy going. Well, what economy was that? I mean, Europe was not doing very well before the pandemic. So tell us what economy you're talking about before you just decide to dismiss people's lives and and how they're doing, and their health situation. So these are the people that we have at the top, right? Amazing. So anyway, some more of your Q&A. Um, High voltage. Hello, everyone. Don't worry. The Q will save us. Let's see. Norman Liu. Does anybody know what the 30,000 guillotines are going to be used for? Norman Liu, what I believe what he's referring to is years back, and I think it was during the previous president's administration, there was a huge order for guillotines, and guys have been trying to figure out what it was for. So I think that's where Norman's story is going. What do we need all that guillotines for, right? So I'm with you, Norman. I mean, I've been watching that also for a while. Um, Truth teller, people have to stand up and take to the streets. Truth teller, true, but problem is we can't. They want you to stay home. You come out, you're going to get a fine. You people are afraid to come out, and if you do come out, you may be locked up, or be fined or something along those lines. So, it's I tell you what, this is exactly the time where we should be coming out, and they've planned it well, where we can't, or we shouldn't, or we're afraid, or some other circumstance. But you know what? What do you say to all of this? I mean, but in keeping things real on the straight and narrow, it does come down to economies were in a whole lot of trouble before this happened. It does come down to central banks were printing way too much before all of this happened. It does come down to what we saw in 2007, 2008 has just been rolled over, rolled over, rolled over, and here we are. And again, it's not, it's really about, I'm going to say, central banks and governments being irresponsible. And right now we're caught up in the middle of it. And stay on the straight and narrow, because that's what it really is. Central banks, central banks, governments, they did not do what they should have done back in 2007, 2008, where, sometimes you just got to let the free market work. There's always bankruptcy. What's going to happen at worst? Somebody's going to go bankrupt, and then what? Sell off their assets, or better yet, someone else is going to come in and buy up that company, restructure it, make it better, and then it continues on. So, I mean, really, what's wrong with that? I mean, that's the way it's supposed to work. And that's what we're going to get into. But before we get into that, got to head over to our website, take a look at the silver and gold price and see what's going on with it. In U.S. dollars, we're seeing silver at about 15.36. We're seeing gold at about 16.83. Both metals still holding, Ratios at about 109, close to 110. So even that, we've come down from 120 plus down to about 109. So, there is movement, definitely movement going on. Excuse me. Excuse me there. No, it's not the virus. Don't worry about that. Had to sneeze. So there is movement. It's a good thing. And, again, this ratio is pretty important. I mean, especially if you're trying to consider which one to buy, silver or gold. A lot of people, they just feel comfortable buying gold straight away. Other guys, they silver is more in their ballpark, where either it's something they're more comfortable buying, or if they look at things like playing the ratio, because this number, it is going to change. This 109 is going to change. So if you're in silver and this number goes down, you're going to find an opportunity to switch over from that silver to gold. And it's something I'm waiting for as well. I'm also waiting for this number to go down. It's just something you gotta hang in there, and it's going to happen. So before I get ahead of myself, I need to stick to the program as they say. And as I was going through this Twitter feed, I came across two very strong, very different opinions, both having to do with the idea that the Fed intervening in corporate America and the stock market. And it's something we're going to take a look at. And first up, we're going to have Chamath. I'm just going to say P. I apologize if you're watching the show, but I don't want to mess your name up. You guys know me already. But if there's one thing my father told me, if you only do one thing right in life, at least pronounce a man's name correct. And I don't think I'm going to get it right, so I'm just going to say Chamath P, who is a Canadian venture capitalist and the founder and CEO of Social Capital. Uh, Chamath was an early senior executive at Facebook, and he's even come out and talked about Facebook, I believe. And he joined this company in 2007. Sorry, he joined Facebook in 2007 and he left in 2011. And then we're going to take a look at a contrasting opinion with Janet Yellen, former Fed head. So we're going to take a look at both people and things that they had to say. This first one's pretty interesting.
But are you suggesting, you keep saying propping up zombie companies. Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because it's not, because when you look at what it means, this is why I'm saying, like, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out. The pensions don't typically get wiped out.
Why does anybody, I just don't understand, why does anybody deserve, using your word, to get wiped out from a crisis created like this? How does anybody deserve to get wiped out?
Well, but just be clear, like, who are we talking about? We're talking about a hedge fund that serves a bunch of billionaire family offices? Who cares? Let them get wiped out. Who cares? They don't get the summer in the Hamptons? Who cares?
I mean, there are people. You don't think the employees? Hold on, Scott. You don't think the employees of these companies own stocks? I mean, own their stocks, own the company's stocks?
You can look on Bloomberg and you can see what percentage of these companies are typically owned by. These things are owned by BlackRock. These things are owned by these huge, amorphous organizations. Ultimately, downstream, and the employee owns a few $100s or a few thousand dollars of shares.
Well, I just don't understand. So this is like a natural disaster. And why does anybody deserve to get wiped out? Wouldn't that be immoral in and of itself?
No, because what's happening right now is what I'll tell you is on Main Street today, people are getting wiped out. And right now, rich CEOs are not. Boards that had horrible governance are not. Hedge funds are not. People are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect poor performing CEOs, companies, and boards. And you have to wash these people out.
Wow. Yeah, I was reading through some of your comments. Very unbiased journalist. The guy just seemed like a whiner to me. A whiner trying to, hey, what about me? What about all of these companies? And that's what bankruptcy's for, Scott. It's already in place, and that's what Chamath was talking about. So Chamath says businesses should not be propped up. Scott says, why does everyone deserve to get wiped out? Would it be immoral to let anyone get wiped out in and of itself? So those are Scott's words. Chamath, Main Street is getting wiped out. Rich CEOs are not. Boards that have horrible governance are not. Hedge funds are not. People are. 6 million newly employed not knowing how they are going to get or how they're going to make ends meet. You have to wash these people out. Wash these people out, meaning people in the C-suite at these companies. So I tell you what, man, it's nice to see that, and when you look at Scott, his reaction was really like a deer in the headlights. And excuse me, I can tell you, there's even times like when you interview someone and you're kind of expecting a certain answer and then it doesn't go your way. you're stuck. You're at a loss, and that's exactly what Scott looked like. He Scott was he's a he's a talking head. What more can you say? Some of your comments, Gabrielle, yes, wow. Thomas, agree 100%. Richard, happy Easter. Uh, yes, happy Easter. Let's see. Um, yeah, Chamath was preaching truth. Um, RR, no, it's not about deserve. It's about people and businesses being held accountable for the choices they've made. Exactly. Again, that's a big part of it. A big part of it. And we have things set up like bankruptcies. We have Chapter 11. We have Chapter 7. This is the road you go. If you're Boeing, your company fails, I promise you, there will be someone else to snap up your company in a heartbeat. If they're not, if the government, if the Fed is not intervening, somebody's going to snap you up, and that's the way it works. Instead, it's about keeping these same people in the same spots, and these are the guys that made the mistakes. They need to be washed out, and sometimes companies need to be bought out, sometimes restructured, reshaped, reformed, revamped, and good to go. And then you go and you do your thing, in these new ways with new ideas. Unfortunately, this is not happening. Um, okay, so then on the flip side of it, sorry, I just want to make sure that John Shore, yeah, you had a question. Um, it's what I was looking at was silver. We got two things going on right now. You have the spot price, and you have your physical price. These two are very different right now. So if you're saying if one is going to fall, um, I don't think it's on the physical side because, like I was saying, you know, each time you reorder from suppliers, that premium goes up, and you sell your stock to people who want it. You reorder, that premium goes up again from the suppliers, the wholesalers, refiners, and whatnot. So on the physical side, don't see it really going down. Spot side, they're just going to play their game. They're going to play their game, but on the physical side, it's really telling us something else. And on the flip side, to Chamath, we had Janet Yellen, and I'm going to show you something that Janet Yellen had to say about all this money floating around.
The onset of the pandemic led to a serious breakdown in the functioning of financial markets. Investors have been fleeing from every conceivable risky asset into the safety of cash. And that's threatened a drying up of funding for Main Street households and firms. So the Fed has taken a huge range of additional actions to ease strains in short-term money markets and also now in corporate and municipal bond markets. Importantly, the Fed has restarted most of the emergency lending facilities that they put in place in 2008. And they've invented some new ones to deal with problems that weren't so important back then. These facilities require Treasury authorization, and in most cases, a Treasury fiscal backstop because they could result in losses. The Fed is allowed to lend to anyone in an emergency, but the loan has to be backed by collateral. The Fed isn't allowed to give grants or to take credit risk. That's a job for Congress and in the administration.
Alrighty then. On the other hand, Janet Yellen is saying let's pick up where we left off in 2008 and use the tools from 2008 and let's invent some new ones. Save Wall Street, Main Street. It's just left eating cake, as they say. Um, Guys, we could not be more divided right now in so many things, so many areas, whether it's political, economic, health, even. Who do we believe? Could not be more divided right now. And, really just what is the Fed thinking of inventing next? And I think, we're already kind of getting wind of it, where what is the Fed thinking about next? Well, from our favorite financial network, Yellen says the Fed does not need to buy equities now, but Congress should reconsider allowing it. So let's just read that again. Yellen says the Fed doesn't need to buy equities now. Okay, so if not now, when? But Congress should reconsider allowing it. Congress should consider letting us buy stock market. It's basically what she's saying. Amazing, right? I frankly don't think it's necessary at this point, but longer term, it wouldn't be a bad thing for Congress to reconsider the powers that the Fed has with respect to assets it can own. This is what Yellen said in an interview. Normally, the Fed is only allowed to own government debt and agency debt with government backing, Yellen said. Central bank has also received special powers. Kind of sounds like some kind of a superhero cartoon or something, right? Central bank has also received special powers during the pandemic to buy other assets such as corporate debt through exchange traded funds. Still, the Fed is far more restricted than most other central banks. Okay, so that makes things a whole lot better, right? So we're supposed to feel better about that. Former Fed Chair Janet Yellen thinks the central bank is not in a position where it needs to buy equities, but thinks lawmakers should give it more leeway for the future. It would be a substantial change to give the Federal Reserve the ability to buy stock. There you go. Yellen told CNBC's Sarah Eisen in the show The Squawk Box or Squawk on the Street. I frankly don't think it's necessary at this point. I think intervention to support the credit markets is more important. But longer term, it would be a bad thing for Congress to reconsider the powers that the Fed has with no respect to assets or with respect to assets it can own. Normally, the Fed is only allowed to own government debt and agency debt with government backing. Central bank has also received special powers during the pandemic outbreak to buy other assets such as corporate debt through exchange traded funds, these ETFs. The Fed has also cut rates to zero and launched an unlimited QE program to help stabilize markets. Still, the Fed would need additional authority to buy ETFs holding stocks. And this is interesting because this is what Japan did. That's the next paragraph, in fact, where Japan went into the market and they bought ETFs. So that's how they went into the market to buy these stocks. So I guess that's what it's going to talk about. Other central banks, including the BOJ, have been purchasing some of their country stocks to mitigate the recent carnage sparked by, well, we got to be fair about this. They were doing this a long time ago. So let's not try and spin it where they're only doing it now because of the pandemic. Shame on you guys. Shame on you guys, CNBC. The Fed is far more restricted than most other central banks, Yellen said. Even with respect to owning corporate debt, the Fed is not allowed to directly own corporate debt, and most other central banks are. You know, I mean, they'll work around it. They'll get into those special purpose vehicles. You're going to see these SPVs come out, and that's one possible way that the Fed is going to do it. Subscribe to CNBC Pro. I think we have viewers here who are more pro than CNBC right now. So anyway, so she says the Fed doesn't need to buy equities now. Why not now? You know, what are you waiting for? What is the trigger for the Fed to buy stocks? Well, congressional approval, that's what they're looking for. Or maybe they'll just go the SPV route, special purpose vehicles. I mean, we don't have a true market anymore anyway, which a lot of you guys touched on already. We just don't. We don't have a true market anyway, so why wait? What are we waiting for? I mean, really, truly, what are we waiting for? What would it take for the Fed? What would it take for the Fed to start buying stocks? What would it take? Why are they waiting? Waiting for congressional approval. What would it take? Congressional approval or SPVs, whatever it may be. But looking at some of your comments, yeah, 495. We're going to have a lot of toilet paper. The real price of silver and gold is on the U.S. debt clock. Steve, I tell you what, that number is just it's going to be increasing. It is going to increase. On target, Steve. Absolutely. Money printer go burr. Rothstein. I hear you. I hear you, my man. Will they try to, Chad Seaworth, will they try to vaccinate all wild animals in the world? You know what? Something I've never considered. I think maybe a lot of us have never considered. Where, are they going to go that far where they're going to have to do that? Going to have to vaccinate your pets, right? Your dogs, your cats, your birds. Who knows? Who knows what they plan to do? Um, Tony, I have many shades of gold. Some even float. Let's see. RR, magical powers, special powers. Welcome to the real Disneyland. What a magical kingdom. Yeah, I mean, it's. I mean, what do you guys think when you hear these? The Fed needs special powers, or they enact special powers, or I don't know. I mean, it's like special powers. It's almost like something beyond us. So the way that they talk about it. So question here: what would it take for the Fed to start buying stocks? And I think we're going to visit our favorite organization again. They seem to give us a lot of content that we can use, but nothing is out of the question. What it would take for the Fed to start buying stocks. All right, so here we go. Should market conditions deteriorate? Okay, that's one thing. The Fed could venture into the stock market. Several market analysts and economists said. Of course, they said that. They need to be helped. Such a move would likely come in the form of a big ETF, which is what Japan does, that tracks major market indexes. Congressional approval would be needed to take such a step. The Fed already has launched a historically aggressive use of various powers. That word again, powers. It's strange why they keep using that word. Anyway, Federal Reserve has unleashed what's frequently been called the bazooka. The bazooka. Why not a RPG? We're in bazookas, right? Bazooka's kind of old already. We gotta get up to date with our weapons here. The bazooka, in its efforts to calm markets, its next step could be to go nuclear. Okay, maybe they did get updated. Should conditions on Wall Street deteriorate significantly, the central bank could go where it's never gone before, passively intervene in the stock market for the first time ever, according to market analysts and economists. The Fed already has unloaded an unprecedented level of ammunition against the tumult brought on by the pandemic. So doing more would take it even further into uncharted waters. However, interviews with a variety of market pros, all right, over the past week showed that the idea of the Fed venturing into the stock market seems anything but far-fetched. The Fed would need congressional permission to extend its operations, but it already has received wide latitude from the Treasury Department through emergency provisions in the Federal Reserve Act. If there were any major dislocations, it's clear that they will go into whatever nook and cranny in the market that starts to choke, said Quincy Crosby, chief market analyst at Prudential Financial. We know that when you have choking in one part of the market, you have choking in another part of the market that leads to dislocation. As soon as you cross that line, you are now facing something else that you could conceivably buy. So indeed, the Fed has already shown a willingness to go beyond its financial crisis response, and it may have to do more if the crisis worsens. As the economic fallout from the pandemic spread earlier this month, Boston Fed President Rosengren said that the Fed may need to broaden the types of assets it can buy to support the economy. We should allow central banks to purchase a broader range of securities, corporate bonds, unlimited QE. You guys all get the picture. One more article. Will the Fed buy stocks to prop up the market? Central bank technically needs congressional approval. Okay, we got that part of it. In the face of mass economic and social disruption from the pandemic, Federal Reserve has been hard at work trying to shore up investor confidence. shore up investor confidence, and maintain liquidity in capital markets, meaning there's no free market. There's no true price discovery. There's no free market anymore. Central bank has pumped liquidity into the repo market and has slashed interest rates to zero. Unfortunately, the Fed's traditional tools have proven insufficient. Consequently, it has started to turn to more unorthodox strategies. So again, this is just about again if they should be buying stocks. And I'll take a look at one more, and I'll get back to this. Allowing the Federal Reserve to buy stocks would be the end of capitalism. Allowing the Federal Reserve to buy stocks would be the end of capitalism. I think we're already there. They intervened. They did not let bankruptcies happen when they should have. They did not let the market freely do its job. So again, this is just more of the same stuff. So let's say the Fed gets involved in the markets. Okay, they get involved in the markets. That popular song by Journey, that one phrase, some will win, some will lose. Some were born to sing the blues. Well, it's going to happen. So who will the winners and losers be? And we did have a talk with Jim Rogers recently that I think many of you folks had a chance to watch that interview. Comments are pretty heated on that one, back and forth. But anyway, Jim, he pretty much laid out in a simple way the winners, the companies that can wrangle in the votes for politicians. Yeah. A lot of these companies, it's as if they're getting, they're being bailed out right now. How do you think the government decides who gets the money and who doesn't? I mean, a Boeing's going to get it, a Caterpillar, let's say, they might get it. But what about like a Starbucks or a Yum Brands? How does the government decide who gets it and who doesn't?
Well, it's going to depend on the ones who have the most votes. And, Caterpillar has a lot of votes because they have a lot of workers there. And likewise, Boeing have a lot of votes, so they have a lot of workers there. Starbucks may have a lot of votes, but, their votes are not the organized kind of people. And they're not necessarily, they don't have a union. They don't have an organization where the president of the union or president of the workers can call up and say, you must save us. Most of the Starbucks people are, they're not, well, I don't know how to say it. They're not full-time, long-term employees. They're short-term, temporary, whatever they happen to be. So that's not an organized mass of voters. But if they can put together enough organized voters, they'll get whatever they want.
Okay. And we're the loser. It looks like the loser is us, you and me. Politicians, I don't know what they're doing anymore. Central banks, these guys are really just working hand in hand. And as central banks save companies, these are the companies that keep these same politicians in office. And I truly don't think they're working anymore for you and me. We're the loser, you and me. We've seen the purchasing power of our fiat go down. It's been an experiment, a failed experiment. And they're trying to scramble to start up a new experiment. And you guys already hit it on the head. A lot of us are already looking at that new experiment being digital backed central bank currencies, or central bank digital currencies, I should say. Let's go back to what one gentleman said decades ago. I want to go back to what he had said. And I think all of you are going to know who he is. But this experiment has failed, without a doubt.
And 98% of the dollar value is gone from the 1913 dollar. So that's not really a very good record. And I think what we're witnessing today is the end stages of a grand experiment. We have a debt-based system. The more debt we have and the more debt the Federal Reserve buys, the more currency they can print. And they monetize this debt. And no wonder we're in a debt crisis. It's worldwide. I think it's something we've never experienced before.
Okay, so one comment here, I want to go to it. 4-9 fine. You hit it on the head. Not losers if we have precious metals. And again, if you're in fiat, you flip that fiat, you buy gold, you buy silver, things like that. Whatever happens with that fiat, you're out of it now, or you're in a different space. So you're now into a store of wealth. You know, you're into something that as fiat really starts to falter, it's going to retain the value of that fiat that you once had it, so to speak. When things finally transition or work itself out, that gold, that silver is going to hold that value that you had. So I'm meaning, let's say you had $100, you put that $100 into silver or gold, and let's say the value of that $100 drops, goes down 90, 80, 50, whatever it may be. That gold and silver is going to hold the value of what that $100 was. And why? Because one thing, it's historical money. Another thing, it's because it's a commodity. You know, in part, it's a commodity. And what's real? What's real are commodities. Wheat is real. Pork is real. Wood is real. Sugar is real. And you're going to need something real to be able to get things that are real. That's the other part of silver and gold. It's something real. And what we need in this world are real things. Water is real. Again, things like pork, like beef, things like that, like oil. These things are real, and they need real money. And that's where, when you switch over from fiat into gold and silver, that is real money. So sometimes you got to think commodities are real. What is real money to buy that real commodity? And that's where these two connect. So sometimes we need to think of it that way. But okay, so this failed monetary experiment, it's running out of options. And we've been talking so far about how things are being set up for the Fed to go ahead by congressional approval, or maybe some type of SPV, special purpose vehicle, for the Fed to go ahead and buy stocks. Is it a good idea? Do you folks think buying stocks, or the Fed buying stocks, is a good idea? Because I think all of you already know of one such central bank that has been buying their equities markets for years. And no, CNBC, it's not only recently due to the pandemic. Okay, so don't paint that picture for people, especially not our viewers here, because you guys are too smart for them. And that would be the BOJ, Bank of Japan. They've been doing this for decades. So is it a good idea? I mean, buying these, letting the Fed get into the stock market. So let's see. Polynesian Pip, been stacking since 64, AU since 75. You, my man, are probably way ahead of a lot of us. I think definitely way ahead of me. Let's see. Susan Klein coins in both forms. Okay. Let's see what else is here. SPVs are already in play and illegal. Glenn Cooper. You know, yeah, that's really a fine. It's gray area. You know, it really is, because the Fed can't do it directly. So they have this sort of an intermediary, to a go-between. And, you know, it's like the Fed can intervene with a hedge fund. So the hedge fund is the middleman between the government and the Fed. You know, government, hedge fund, Fed, hedge fund, government. So there's your SPV, that special purpose vehicle. Sometimes I'd really like to say, a lot of times are things like BlackRock, you know, these companies. So they need an in between. There's a gray area. So you've it's a good point what you brought up, and it's either going to be SPVs or congressional approval, one of the two, or unless there's some special act by the powers that be. True Teller Depth Clock is showing silver 2,300, gold 19,000. I haven't taken a look at it yet, but I think after this live stream I will, because if I see that, I'm going to fall off my chair, really, truly, if I see that. So again, it's Jim. They are by STDs, the financial equivalent of, yeah, you know, I think, who was it that said that? Was it Brent Johnson or Luke Groman or one of those guys. I don't want to misquote him, but I think one of those guys had labeled it an STD, and it's kind of true. It's very true. So again, Bank of Japan, they've been doing this. Is it really a good idea? Because it does sound familiar. So I want to take a quick look at an article just to touch on it. Two more articles, and I want you to take a look at the date on this one, 2018. Okay, so this was year and a half ago. Sorry guys, it's about a year and a half ago. Bank of Japan's huge stock buying program reaches its limits, and they thought this a year and a half ago. Time to consider reducing purchases which distort valuations and raise governance questions. Okay, a year and a half ago, they thought that they couldn't do much more. Bank of Japan has for years bought Japanese stocks as part of its massive monetary easing program to lift the country out of deflation and hit a 2% price stability target. Under Governor Haruhiko Kuroda, quantitative QE and monetary easing QQE plan, stock buying through exchange traded funds started in 2013 at a pace of about 1 trillion yen annually, expanding to about 3 trillion yen in October of 2014 and further to about 6 trillion in 2016. Purpose was to increase aggregate demand and thus inflation. So that was their purpose. They wanted inflation, as well as to encourage Japanese savers to take on more risk by buying equities. So that's what they wanted. They wanted the Japanese people basically to take on the risk. Okay? Take on the risk. But QQE has not yet delivered the hoped for results, with inflation, excluding food and energy, stubbornly stuck around 0%, despite the Bank of Japan's huge efforts. Meanwhile, stock purchases have helped raise equity prices, but they have made the central bank a very large investor, raising problems of stock valuation and corporate governance. It's time to think again and consider phasing out stock purchases. So back then, they're already considering phasing out stock purchases, and we're considering implementing stock purchases. There are very few central banks in the world that have purchased domestic stocks on this scale and for such a long time, for more than 5 years or so. Hang on, let me get through this. The current ETF purchases are also different from when the Bank of Japan previously purchased bank stocks to protect financial stability. Okay. So when the BOJ embarked on mass stock buying, it had no history to draw on. Similarly, the extremely challenging task of normalizing policy and ultimately selling stocks purchased is without precedent. And that's part of the problem. The Fed buys up these stocks. At some point, who's going to buy it? They have to buy it, right? And the thing is, they're going to want you and me to buy it. Stock prices began to rise from the late 2012 in anticipation of, okay, you know, I'm gonna end it here. Couple interesting points here. Bank of Japan has been buying stocks in the U.S. and central banks throughout the world will follow suit in the same fashion. However, there still remains the curiosity of one collective group that is supposed to keep the markets up. You and I, we know them as the Plunge protection team, and we're going to get to that shortly. But one thing before that, what struck me in this article was the part where it mentioned Japan did not get the inflation it wanted, and the Fed is the same. The Fed's not getting the inflation it wants, and the hope for the increase was that Japanese individuals buy shares in the market, and that failed. It failed to materialize. And this is important because is the Fed supposed to reinflate everything? And then are we supposed to come in and buy those stocks where the Fed's going to sell it to us? Is that part of the plan here? Because when I go back a couple weeks, it reminded me of something that I saw in the news. And I'll share that with you. Remember this? White House considering tax incentives for more Americans to buy stocks. The White House is considering ways to incentivize U.S. households to invest in the stock market. Same playbook from Bank of Japan, which did not happen with Bank of Japan. So the U.S. is looking at this, but what we're going to do is incentivize U.S. households to buy stocks. And how are we going to incentivize? And you guys know me, incentivize means manipulate. Under the proposal, a portion of income would become tax free. That's how they're going to do it. This was what the BOJ was missing, and this is what the U.S. looks to change. A portion of income would become tax free for investment purposes. Trump administration is considering several proposals as part of the forthcoming economic stimulus package. So that's a key difference. Bank of Japan was missing the people buying the market. Can't sell the stocks. U.S. is looking at, well, okay, if the Fed is going to buy up the stocks, at some point the Fed has to sell the stocks. So maybe they can sell the stocks by, let's create a tax-free incentive to the people, and then the people will buy the stocks, and then the Fed can offload whatever they had bought. So what's your two choices? Either the Fed's going to offload it to someone, or the Fed's going to keep it all. So either the Fed's going to own everything, or they're going to give it back, and they're going to try and give it back or sell it to us by having some type of tax-free incentive. I mean, it's really only the two choices. The Fed either keeps it or they don't once they buy stocks. They either keep those stocks or they sell it. There's no in between, right? I mean, if there's an in between, let me know. So that's really my view on this. Let's see, John Shore. I think the plan is to land grab and create enslavement. And I feel that plan may be taken out with any luck, if not physical silver. You know, John Shore, a comment like that, you know, it kind of makes me think there's no way that tax revenues can pay down this debt that is coming on right now. There's no way tax incentives can, taxes can do it. There's no way. They're going to need something more than taxes to try and pay things down or normalize things. What else is there? I mean, taxes, well, what's left? They're going to reach into assets? Are they going to reach into assets, or are they going to reach into these other things that you've worked for? Taxes will not be enough to pay this thing down. They are going to need more. Without a doubt, they're going to need more. But, you know, going back to what I had put up, you know, why is the Fed so interested in buying stocks? You know, again, I put this up earlier, Bank of Japan has been buying stocks for a very, very, very long time. But there is an organization in the U.S. we already have, and which is the Plunge Protection Team. So if we have the Plunge Protection Team, which is supposed to be buying up stocks, and it is true, it's not a conspiracy thing, why this shift now where maybe we should let the Fed buy stocks? But a little bit about this Plunge Protection Team.
There's another evidence of going from consolidation to power in the hands of just a few. And this has to do with the stock market. In your book, you write about in early May 2010, the stock market experienced what is being called a flash crash. What was that all about?
John, what happened was that in about 1 hour, 1,000 points were lost on the Dow index. And nobody seemed to know why it happened. In fact, there was hardly anything about it in the paper. No one talked about it. Come to find out, it was probably a trader error, a typing of 1 billion instead of 1 million in an order entry, causing computers to immediately begin automated selling.
And you've got, back in 1988, our good friend Ronald Reagan, who was the president at that time, created by executive order what has been referred to as the Plunge Protection Team. This is something I didn't know, David. Sometimes it's referred to by economists as the 4 dictators. This is right here in the United States. Mm-hmm. What in the world are the 4 dictators, this Plunge Protection Team? And it's actually been in action recently.
Well, actually, the Plunge protection team was put into operation by Ronald Reagan, and he did it as a backstop against unexpected happenings in the stock market. Yeah. He started it, and it continued kind of below the radar screen through the presidents that followed him, and Obama brought it back to the top. And today, we have this Plunge protection team made up of four really powerful people, including Ben Bernanke, Timothy Geithner, Mary Shapiro, and Gary Gensler. And the committee functions under executive order, and it's to intercede when the stock market appears headed for a plunge. Now, note, John, these people aren't elected. They are all selected by the President of the United States, and they have ultimate power in that moment of crisis, and they determine whether it's a crisis or not.
How do they help a crisis or stop a crisis?
Well, they supposedly take action that would not be able to be taken without committee approval or without a long process. They step in and they make decisions immediately that help us supposedly not experience what we experienced in these recent months. But the issue is not so much whether it is a valuable or viable thing. The issue is that it has been taking the power that belongs in the Constitution and attributing that power to four people who have no check and balance and are able to manipulate the whole market by vote of four people.
Amazing stuff, right? So if you ever thought that Plunge protection team was some type of conspiracy type of a deal, it's real. That Plunge protection team is real. So when you guys see people commenting, Plunge protection team at work, it's real. You know, they really do exist. So just want to go through a few commentaries. I'm watching your comments here. You guys got some pretty good conversations going on. And I did see that thing about seeds. If any of you guys knew me years ago, seeds were one of the things also that I did look at as something that people should have. You know, you talk about everything you should have on you, all of these things, you know, gold, silver, this, that. Of course, gold, silver, yes. But also things like seeds. You know, those were things that were very simple to get. And it's kind of rough when a lot of the seeds nowadays that come out, they don't, it's like a one-time deal. These seeds aren't going to reproduce. You know, you get your one crop, so to speak, and that's it. There's a whole lot more into it, but maybe that's a different story. But okay, so some of these things, Plunge protection team was set up by Reagan to brace the markets. If the Fed buys stocks, perhaps we may no longer need the Plunge protection team. That role will be fulfilled by you and me, where we brace and hold up the markets, and we get a tax incentive for doing it. Basically, the Fed gives us the crumbs while they take the entire meal. Can you imagine the euphoria? Okay, we are going to be euphoric of seeing our investments in the stock market rising in perpetuity. We're going to look at that market. Hey, our stocks are rising and we're going to feel good, right? But the Fed and central banks will basically own everything, and we are going to love them for it. They basically are trying to reinflate everything, and we're going to love them for it. You know, a lot of people are going to love them for it. Will people care to wake up when, let's just call it, the bread and circus comes to town? What will fiat be worth? And at that point, if it even gets to that, what would we even care what the fiat price would be? And a lot of people, you see it already. Why should we even work? Why should we even pay taxes if the Fed is supporting the markets? What about the people? Why should we work? Excuse me. Why should we work if money is all over the place, including in our wallets? You know, they're giving us a little bit here and there, $1,200 a month or so. Kind of makes you wonder why should you work at that point, right? I mean, they can just simply print up all the money that they want. we need sound money. We can go back to Ron Paul. We can go back to Austrian School of Economics. We can go back to history, what history tells us money is. But we need it. We need sound money. The experiment is over. It failed. And they're trying to reset the pieces on the board right now. Sound money is financial freedom. A lot of people think financial freedom is being rich. In a sense, yes, it is. But to me, financial freedom is being able to have money outside of the current monetary system. To me, that's financial freedom. And I think a lot of you folks see that as well. Sound money calls for responsible government. We need to be responsible to ourselves, our families. We clearly see this monetary experiment is not going to end well. We'll be given new money at some point in time, although for me, probably for you, we're quite happy with old money. Old money being that silver and gold. Old money, historic money, it's the vehicle that's going to position us perhaps in the best place possible as we transition to this new monetary system. Guys, history is on our side. History is on our side. And history always repeats itself. As central banks go mad and try new things, I think we're all going to see how gold and silver gives us that wealth protection and that peace of mind, especially as we're going to be watching a lot of these things that are going on around us. So that would be my commentary to all of these things that we went through today. Kirsten Strand, haven't seen you in a while. How you doing? All farmers must be new seeds annually. Yeah, I hear things about this. Admittedly, I don't know much about it, but I understand that there are seeds that can actually they grow into their plant, and then the plant has seeds, and then you can take those seeds from the plant. Like, let's think of like a tomato. But for some reason, these seeds coming from the tomato, they're created some way genetically where those seeds will not produce. So I don't know the full story behind it, but there are certain seeds that will reproduce, and there are some seeds that won't. So, maybe one day we'll talk about it. But anyway, it's a good point. Let's see. Lark ball history is on our side. It is. And as you're saying here, Marak, it may not repeat itself, but it does rhyme. It does rhyme, without a doubt. Silver and gold, I'm comfortable with it, and I think a lot of you guys are comfortable with it. And there's a lot of guys on the fence who are watching this and who are still trying to understand why gold, why silver, and they're looking at the price and they're seeing, $15 silver. They're watching it, up and down, up and down. And for those guys, again, it's not about price. It never was just about price. It's about what it does for you. It's about being that store of wealth. Silver and gold, when you hold these things, there are a lot of things you got to look at, and you look around and you see what's going on around, and then if anything, it gives you confidence that what you did was the right thing to do. It's just a matter of time. That's all. It's just a matter of time. But in a sense, that's where time is on your side, where you have time to accumulate if you understand what it does for you. And we've been getting a lot of new accounts being opened up here at Silver Bullion in Singapore. A lot of you guys have questions, and we try to keep up with those questions as best we can. And a lot of you, you do start to see where, yes, you should have gold and silver on you. I guess that phrase is, if you don't hold it, you don't own it. Well, to a point, I believe that. You should definitely have it on you. But then again, you should also take a look at, the stability of your country. How stable is your country? Is it very stable, or is it not so stable? So you have this little meter here. Is my country very stable? If it is, you feel comfortable. Okay, good. Keep it with you. If you feel it's not stable, this is the time where you would want to consider maybe having it in a different jurisdiction, where it's a jurisdiction that's favorable to you. because, like I said, there's no way tax revenues can pay off these things. No way. And I do think, at some point they're going to have to reach into things that we have or we own. I don't see how that's not going to happen, because the tax revenue is in no way going to be able to bring it down. So anyway, a few of your questions and comments before I head out, or actually stay in, not going anywhere, but got other things that I need to do. So a few of these. Dan Pridgen, we plan to accumulate while they plan to manipulate and confiscate. Couldn't have said it any better, my friend. It's a good way to look at it. First time I've seen your name here also, so welcome aboard. Welcome aboard, Dan. Let's see. Truth Teller, look forward every Sunday in the U.S. Okay. Well, there's a very good reason to look forward to a Sunday. I look forward to Sundays also. Let's see. Glenn Cooper, Bill had a look, not on YouTube. Okay, not sure what what that one is. Let's see. Okay, yeah, you guys got a lot of good conversations going on amongst yourself. Let's see. Glenn Cooper, how does debt clock work for gold? Pretty much just go to that I think it's www.debtclock.org, and then lower right hand corner you're going to see the gold and silver. Those are, I believe, it's if you take into account the money that's being printed up, and if you had to use gold and silver to revalue or to account for that money, then that's what the price of gold and silver would be. I believe that's the way it works, as far as my understanding. If anyone else has a different opinion, feel free to share it with us. Let's see. DJ John Cardona, will there be a problem cashing out of precious metals? Absolutely not. Two things. One, your bullion dealer, he will take it in. Depending on his liquidity, he will take it in. I know for us, we can take it in. We can buy it. Second thing, you may not, depending on the time you want to sell it, you may not want to be selling it for fiat. You may want to be exchanging it for a business, for a piece of land, for a share of a farm, for a house. That's where you're going to want to be looking at as far as selling it in some sense, because I think, again, it depends on the time you want to sell it. If it's at that time where things are really bad, you will have no problem trying to find a guy who will take your gold or silver, and he's trying to sell his apartment, his a share in his farm or whatever it is. I don't think you're going to have a problem, and I don't think depending on where you are, as far as your bullion dealers, they will take it back because there's two sides to the trade. Someone wants to sell it, someone wants to buy it. And unfortunately, the guys who are coming in late, they're going to be buying it at a very, very high cost. So accumulate, as much as you can right now. Try and accumulate. I know it's getting tough to find. Lark Ball, appreciate it. Don't panic. No, we never panic, right? No, it's true. Don't panic. Don't panic. Thank you, Lark Ball. Appreciate it. Don't panic. You guys already know what to do. And again, it's the guys who are watching this, sitting on the fence, who are unsure. As I always say, your comments, more than me, your comments are going to be the thing that moves that person to understand what gold and silver does. So again, your comments are very, very important, because I promise you, trust me on this, there are people watching who are not sure what to do, may not understand gold and silver, and when they see your comments and how you folks talk about it, it opens up a whole new area for them. Because for me, I'm biased, right? I'm biased. This is the program we put out. I'm biased to where, yes, I do love silver and gold. I like silver more, but it's because you see things like the ratio, but you understand what precious metals do. So if you're new, you're considering it, Don't take my word for it. Look at the comments. Just look at the comments, and you're going to see why guys absolutely know the reasons why to buy gold and silver. But again, you can, if you have questions, you can always, I'll put this out here as well. If you have questions, hang on, let me type this out. Okay, so if you have questions, send us an email, and we'll talk to you about, maybe why you should consider gold and silver, why you may want to consider even storing it outside of your jurisdiction. And again, we're going into a different time, and got to understand that fiat, I don't think it's really going to make it. Something else is going to come in play. And again, you need that wealth storage vehicle. And this is where, again, a big thing that gold and silver does for you. Yeah, the ratio is high. For some of us, Marak, gold silver ratio, 5,000 year high. Don't know about 5,000 year high, but it is high for sure. For me, it's just tells me to just buy more silver. I mean, I do have silver, I do have gold. I do buy when I can, but definitely more silver. I have more silver than gold, if any of you guys are curious out there. Okay, so with that, I better head out. Again, I do hope you all had a happy Easter, and just stay safe. As we always say, be a blessing. Be a blessing. Don't be a burden, or try not to be a burden, but be as much of a blessing as you can. That's important. People are going to need relief. I don't want to say the word help. People are going to need relief. And, as always, saddle up for what's coming ahead. Saddle up for what's coming ahead, and silver up as well. Silver up, because this is one thing that is going to be able to help you out. So you guys take care, and I'll see you again next week, God willing. You guys take care. God bless. Be safe. Take care.